Right, welcome back to the Daily Report and welcome to the Marketplace. Tonight we tell you what exactly has happened that has caused the volatility between the dollar and the shilling and how exactly this affects you. Already in studio, we have the people who of course are going to be telling us what exactly this means to the ordinary mwananchi. We have the CEO of the Kenya Bankers Association, Dr. Habil Olaka. Dr. Habil, how exactly is the Kenya Bankers Association faring on? What exactly do we know about this particular debacle?
Well, I think from the Kenya Bankers Association, I think what we would like to assure the market is that all is not lost.
Right.
I think we have had some bit of volatility in the market, and that would ordinarily be expected. But from the banking sector, I think one thing that we are confident about is the fact that we have got what it takes to stabilize the economy. We have been blessed to have an adequate capital position in terms of capital adequacy. We have also had some very strong liquidity in the banking sector. And with those two factors, I think we are better pleased to be able to stabilize the economy.
Right. And at the end of the day, the most important thing is, of course, having an environment where businesses can thrive, right?
Yes. In fact, we have seen some very significant growth in terms of credit outflow from the banking sector.
Right.
Which is very positive. We have achieved something like 13.9 this year,
right,
compared to 12.5 last year. So we have had some very strong growth.
Right.
Yeah.
This is a very positive trajectory. Now, from the business sector or business people within the country, we of course have the Kenya National Chamber of Commerce and Industry. We have the department or the committee that deals with manufacturing, the vice chair, who's just going to be telling us a little bit about how that particular sector is faring on with the changes in the currencies. If you could just start by introducing yourself, the Kenya National Chamber of Commerce and Industry, what is your committee about?
All right. Thank you so much, Abik, for the opportunity. I would like to just inform your audience that the Kenya National Chamber of Commerce and Industry is a trade support institution that seeks to create an environment that businesses can thrive, investment can grow, and of course there is a lot of collaboration across the business environment. Basically, we have a couple of areas that are of interest to us as the Kenya National Chamber of Commerce and Industry. One of them is advocacy, making sure that public policy within the government favors an environment of business that we can grow and generate more opportunities and also improve on the welfare of the citizens. Another area, of course, is economic diplomacy, where we want to create relations across both the private sector and government. There is also inclusivity, where we will want to have, many people, especially women, youth, and people with disabilities, getting involved in business activities. Last but not least is market linkages. As you are aware, the global environment today is becoming a global village, really. And we would like to have a forum where our members are able to know what technology is coming into the market, and they are then able to adopt it, what market opportunities are there out there, and also within the country as well. Goods are being produced maybe in one part of the country, could be in big demand in other part of the country. So the Kenya National Chamber of Commerce has 47 chambers across the country, of course, with a chamber president and his team at the head office, which includes myself. At the manufacturing committee, we have a lot of value chains that we look after. For example, agro-processing of coffee and tea. We have leather value chain, we have cotton value chain, and a couple of other subsectors.
Right, of course, the manufacturing sector is very well represented from the Kenya National Chamber of Commerce and Industry, an umbrella body that usually embodies or that usually holds a lot of businesses. Before we proceed with this particular conversation, though, let's hear a word from the Cabinet Secretary of Treasury, who's just going to tell us what exactly this may mean for the country. The first clip.
Find that the component of foreign direct investment, that is the inflows, are very, very important. And those are the ones that are also pushing the exchange rate to appreciate, to discover its own level. And once it discovers its own level, we are actually going to see the next price, relative price or price we are going to look at is the interest rate structure. A combination of the inflation coming down, the nominal exchange rate finding its balance is going to ignite actually growth. strong growth will come. So the momentum for growth is actually very, very important. Don't forget that once the nominal exchange rate is actually predictable because it has resolved itself, interest rates are low and the inflation is coming down. It's a combination of lowering cost of living but raising the expectations for investment, and that is what drives the momentum for growth and the vibrancy of the economy. We are quite
Right, that is the Cabinet Secretary for Treasury in Njuguna Ndung'u. Dr. Habil, he has talked about the trifecta effect, right? When the economy is, in question, there is, of course, inflation rates. There is, of course, the base rates that usually interest rates, are based upon. And, of course, there is the fact that there are exchange rates that usually, the country has to adhere by. When it comes to what he just said, what are your thoughts on that?
Well, in an economy, what tends to happen is that there is the central bank, for example, that is responsible for the monetary policy. And that's basically to ensure that there's price stability in the market. And Professor Njuguna mentioned about the fact that inflation is a factor that needs to be taken into account. Right. Because in an inflationary environment, you cannot have price stability. So what central bank would normally do is to ensure that you bring, inflation under control, you tame inflation. And one of the tools they'll use normally when inflation is edging upwards is to increase the interest rates in the market in order to bring stability. And once inflation has been controlled, then you can start bringing the interest rates down. And Professor mentioned about the fact that, we are now seeing ourselves getting into that stage where now we are seeing stability, and therefore the interest rates will start coming down as the next phase after, controlling inflation. Right. And I think that's where we are right now. Right. You recall between last year, May last year, and February this year, Central Bank increased the central bank rate by almost 350 basis points. That's 3.5%. Yes. 9.5 to 13%. Yes. And that was it's not pro-growth, but it's a necessary evil in order to tame inflation. Right. And central bank has done that. It's partly to tame inflation and also partly to stabilize the exchange rate, which they have done pretty well. Right. Now, as we speak right now, we have seen the exchange rate beginning to come down in terms of the shilling value of the dollar. Right. It's beginning to come down, which means that you are approaching that stability. Right. And therefore, once that's achieved, we'll start seeing, for example, the interest rates now start slowly coming down, which means that is now pro-growth, where now we can have more borrowing by the productive sectors of the economy and therefore fuel growth going forward. Right. And usually people say it's darkest before the dawn. So, it's called necessary evils. Do you then believe, Engineer Chris, that these necessary evils have been good enough for the manufacturing sector?
So basically, from a manufacturing point of view, I think looking at the way businesses operate, and I would give you what we consider as best in practice in business planning. We have new product introduction, where you look at what is the target market you want to make products for, and then you set a price for that market. You do your demand forecasts for the period in question, maybe a year or so. And of course, you look at your supply planning in terms of the materials that you will need to make those products. And the financial component. If, for example, you produce at the same level of productivity for the period under review or under consideration, you will make this margin or this profit for your shareholders. Now, the current scenario, and I'm happy to hear that there is a lot of effort from the people at the policy level to control the level of exchange rate. Then it will help organizations to be more prudent and be able to manage risks more effectively. I'll give you a typical example, which I have personally encountered. In 2021, the average exchange rate to the dollar was about 109 shillings. Then it went to 123. Then recently it went to a high of around 160 shillings. We bought an equipment which was approximately $1 million. The exchange rate then was around 120 shillings. So the purchasing price for that equipment then becomes 120 million. And today, if we were to do the same project, it means we would have had to buy. Of course, there is some good news that the exchange rate now is in the range of 140.
Right.
It means we would have gone up, we would have had to get more money.
Right.
So it will be very helpful to us as manufacturers if we could have a predictable control in terms of the exchange rate, so that it helps when we are designing new products.
Right.
We are able then to factor in the dollar rate, because at the time of budgeting, you are working with an estimation, certain assumptions about the exchange rate. And if that assumption does not materialize, then it throws off and it puts business executives and boards into a tight position in terms of investment and trade as well.
Right. And of course, Dr. Habil, before I give you a chance to be able to tell us what exactly you feel about those sentiments, I'm pretty sure that it's going to take, or you have something to say about that. We will just be looking at some of the exchange rates that we have been having. Of course, in the last month or so, we have seen that they have changed significantly, and these changes usually have to be borne by manufacturers. People, in the tours and travel for manufacturers, it's usually, doom and gloom when the dollar is winning against the shilling, but for people in tours and travel, that's when tourists want to come. So we have winners and losers in every particular situation now. Let's just look at the significant rate changes by date. By Sunday, 21st of January, it was, of course, exchanging at 159.13, which is 13 cents against the dollar. On Monday, 22nd of Jan, it was at 162 shillings and 50 cents. By Monday, 29th Jan, which was the end of the month, it was around 162 shillings. This was, of course, one of the highest rates that we have seen. Dr. Habil, as I give you a chance, of course, to give a rebuttal for that particular, comment by Engineer Chris, what exactly was going through your mind when these changes were happening?
Maybe just to give some comfort to Engineer Chris, I think he's right.
Yes.
The sense that you need to plan for you to succeed.
Right.
If you don't plan, you're planning to fail.
Right.
You see, and that's a very, it's sort of like a truism, so to speak. But I think we, first of all, need to understand something about the exchange rates.
Yes.
There is what we can call the fundamental value, which is driven by the fundamental, quantities.
Yes.
And then there is what you can call the sentimental value that is added onto the fundamental value to give the exchange rate that is given there.
Yes. Now,
the sentimental value sometimes is driven by factors that are not necessarily based on the fundamental things, Sometimes the confidence you have in the economy can drive that value.
Right.
And the point I'm trying to put across is the fact that to an extent we saw a very steep depreciation of the Kenyan shilling. And part of it was not being driven by the fundamentals. It was being driven by factors that were not based on the fundamentals, partly because the market was responding in anticipation of what was expected.
Yes.
And by this I mean, for example, the anticipation of the fact that we were having a Eurobond that was maturing in June.
Yes.
And there were perceptions in the market that we may either default, in other words, we're not able to pay it, or the other alternative was the fact that the government was going to come into the market and mop up the dollars in order to be able to pay. Either of that means that there'll be a shortage of dollars in the market. And so what do people do? You then buy those dollars and wait for the government to then come and buy from you.
Yes.
Now, what did the government do? It was a very smart move. What they did, they then issued another Eurobond, got the proceeds from the Eurobond and used it for offsetting the maturing bond.
Right.
Which means they did not have to come into the market to buy the dollars.
Yes.
So those who had actually held onto the dollars anticipating that appreciation discovered that the dollars are no longer required. And what do? You then dump them back into the market.
Right.
And that's why you see the rate quickly reversing and beginning to flow down to what we think should be the fundamental value.
Right.
After these sentiments have been wiped off, this noise, after it has been wiped off, the dollar now is at about 140, 142, and it's still going down.
Right.
So it possibly hasn't reached its fundamental value yet.
Yes.
But we see that as the equilibrium value at which it will stop. And so, just to assure the market, is the fact that after this noise has cooled off, we'll finally see the shilling boiling down to its fundamental value, the equilibrium value,
yes.
and you'll have a stable market
right.
that you can now anticipate. And so to his point about being able to plan, you can now plan better in a stable environment rather than when there's so much noise like this.
Yes, and then it even makes, it easier for manufacturers to plan out, their purchases, exportation, importation, try to balance out their books. When it comes to manufacturers, Engineer Chris, though, we did see, especially now that he has said there's a lot of noise, considering that a lot of people were anticipating that the government would come back and buy back these dollars, but they didn't. And then there was a lot of dollars in the market that people were panic selling because they saw that it was dipping very fast. What are your sentiments on that?
I think on my part, maybe it's fair to give you a perspective.
Yes.
A bigger perspective in terms of manufacturing. Mm-hmm. Of course, about around October 2022, His Excellency the President gave us, the people in manufacturing sector, to work towards achieving 20% of the GDP from manufacturing by the year 2030. Mm-hmm. To us, it is a very realistic, achievable target. Yes. However, when you look at the performance of manufacturing from 2017, for example, it has steadily been going down. It started with an average of 9% yes. contribution to the GDP. And in 2020, it had gone to the lower, a very low of 7.1. Yes. And as we speak today, we are in the same, approximately the same 7.2 yes. thereabouts. Mm-hmm. Now, the concern we have as manufacturers, of course, is to, number one, reverse the continuous, consistent trend right. of decline, because it has been done in other countries. Yes. For example, Thailand, today, their contribution of manufacturing to GDP is around 34%. Mm-hmm. It's workable, and it's driven largely by agro-processing, right. food processing, export of motor vehicles and all that. Here in Kenya, we have the capacity to produce a lot of those things so that we are able to export. Mm-hmm. So looking at the noise in the exchange rate to the dollar, then yes. it brings us back to the main fundamentals. Because you notice when you are making a product, a lot of the product raw materials that we use have a component of the exchange rate in it. Talk about transport costs to deliver goods to the consumers. Talk about energy. Energy, when you're producing electricity, there is a component of the dollar yes. in the costing of the power. Mm-hmm. So with that kind of fluctuations, right. we believe as manufacturing sector that the sooner this noise is calmed down, yes. the better for us, because then we would be able to deliver yes. the vision we have for manufacturing in this country. Right. And I would confidently say that there is a lot of technical capacity, there is a lot of raw materials and the goodwill right. to deliver the growth that is desired in manufacturing. Right. In other countries, like as I said, Thailand, they are employing about 6.5 million people right. in manufacturing. And here in Kenya, we feel if we grow the GDP to 20%, we'll easily hit 1 to 1.5 million people only in manufacturing subsector.
Right, and maybe that would even help us move from the middle income status that we haven't been really stuck in, but it's good to move up a little bit, and that would even present more opportunities for Kenyans. And speaking of Kenyans, of course, as TV47, we had to go and find out what exactly Kenyans feel about the exchange rates, how exactly they feel about all of this noise, and what they even know about it in the first place. Let's play the next clip.
What you are praying the government is to make it steady, because we know the reasons. I have two reasons why it is appreciating the Kenyan shilling and the dollar is depreciating. First of all, it's because we secured a Eurobond, $2 billion Eurobond last week. So it means the government has a float of dollars. So the dollar is stable because we have a float of dollars. The other reason is because in China, there are end-of-year party celebrations, and so the businesses are closed. And when you look at Kenyan market, where we import much from as our traders in Kenya is China.
Tunafaa tuone changes juu mekuwa wakituambia mambo ya dola iko juu, maisha iko juu,
So tunatumai kana kwamba serikali itazusha maisha juu dola pia inaendelea na kudrop.
Na ninataka kusema kama dola imeenda chini, hata mafuta, petrol, mafuta ya taa, petrol, diesel, hata hizo zinafaa kuenda chini, manake dola imeenda chini. Na ninataka kuemisha wale watu ambao wako na madola kwa nyumba kutoka saa hii. Manake tulikuwa tunatarajia, hata mimi nilikuwa nafikiri dola inaendelea kuenda juu. Sasa tunaona dola ni kushuka inashuka. Na tunaomba serikali kwa ile agano ilipatia mwananchi. Manake mimi ninakumbuka nikifanya biashara serikali iliyopita, tulikuwa hii dola ilikuwa imefika kitu 100, 106, 110, haikuwa inapita hapo, sometime inaenda hata 90 something. Kwa hivyo naomba serikali bado uendelee tu kung'ang'ana paka dola irundi chini, ndio maisha ya mwananchi irundi chini, manake dola ikiwa juu hata kuleta vitu kutoka nje hiyo inatungarimu sana.
Right, those are the sentiments of Kenyans. Of course, there's truth, there's fact, there's, misconceptions, there's myths. We're just going to be, breaking it down, seeing what exactly they know, what exactly they don't know, what's true, what's false, and how exactly Kenyans have taken this particular information. Of course, the very first person who spoke did say that they know that, the exchange rate changes are from the Eurobonds. What would you say about that, Dr. Habel?
Well, I think the perception about the Eurobond and the turnout of the Eurobond and the confidence that it has given into the market has made the players start behaving, anticipating that confidence. You see, because when there is confidence and you know what is going to happen next, and you therefore do not have to rush to acquire the dollars even if you don't need them. Because what was happening in the market was this.
Right.
There are a number of players who, because of the talk, because of the anticipation, they were expecting that there'll be a shortage of dollars. So what do? If I am one who receives dollars in terms of I'm an exporter and I receive the dollars, but my expenses are in shillings, so what do? I hold on to those dollars. I don't release them to the market. Now, if I'm a manufacturer, like him, and I rely on imported goods in terms of the inputs. What I will do is that whereas I need my inputs up to March or up to April today, I'm buying all the way up to September or even up to the end of the year, stocking them today because I know if I wait for later, I might have to pay more in shillings because I'm expecting the rate to depreciate.
Right.
That action by all the players in the market creates an artificial shortage of dollars in the market. And so what happens, the rate then starts going up.
Right.
So we see depreciation, not backed by fundamentals, but backed by the behavior of the people.
Right.
When we now have more confidence in the market and we see the exchange rate beginning to come down, what happens? There is no more value for dollar for me. So if I am an exporter and I receive dollars, I release them to the market.
Right.
If I'm an importer and I'm relying on getting my raw materials, I'll buy just what I need for now.
Right.
And not buy for the future because I know the rate in future may come down, so I might even get it cheaper in future than today.
Right.
So the behavior of those people now makes sure that the dollar then becomes its true value. So you get the shilling exchanging as its true value and therefore supporting the market. And in terms of even future decisions, it's much easier.
Right.
Addressing the problem that you had mentioned, where it's so difficult to plan for the future because you don't know what the rate would be.
Right.
Yeah.
And with a more stable environment, it would be even easier for manufacturers to not always be on their guard when it comes to importation and exportation. The very first clip that we played, the very first person who spoke was also saying, Engineer Chris, that when it comes to this time of the year, usually it's a Chinese holiday and there's no need for importation. Therefore, we have dollars that is backing our currency. Is that true?
Fairly true, I would say, because it's true. A lot of our Chinese partners, suppliers, most of them today cannot be, they are not available in the office because they are largely on their holiday.
Right.
However, I would like to point out one thing, that as an economy, the product that we import the highest is petroleum products. The second one is industrial machinery. Then followed closely by iron and steel and vegetable oils and all that.
Yes.
Industrial machinery then are the tools that we as manufacturers use to deliver value to add value and be able to make products available to our consumers.
Right.
So in spite of the fact that there is, of course, the holiday in China, there is still a lot of planning organizations are doing, and we anticipate that immediately they are back on their operations, we would be able then to get those equipment.
Right.
And the environment where we have a predictable currency,
Right.
we still feel would be the ideal, although of course, as Israelis say, there would be a lot of fundamentals and there would also be some speculations and all that.
Right.
However, I would want to maybe point out something to Daktari.
Yes.
Based on my own research, I established that within the East African market, within the period of 2020 to 2024,
Right.
the Uganda currency has been changing at the rate of $1 to 3,600, 3,700, 3,800 UGX to 1 shilling. I mean to $1. And when you look at the percentage weakening of their shilling is around 6%.
Right.
Tanzania has been within the same threshold, 2,300 to 2,500. They have lost about 8% maximum.
Right.
You look at Kenya's scenario, in 2019 it was 106. Today we are talking about 161. Looking at the figures on the board,
Yes.
you are talking about a volatility in excess of 50%.
Right.
So for having also worked closely with partners in those countries, the manufacturers in those countries, one of the things that they have pointed out as a key driver for their growth is that they have been able to plan more effectively,
Right.
they have been able to access machinery, and they have been able then to give their customers a predictable producer price index,
Right.
which usually drives the consumer price index. In our scenario, I would say because of the unpredictable market forces, most investors have been hesitant to put capital to equipment purchase.
Right.
And therefore, as you know,
Right.
one of the biggest drivers for creating wealth to any economy is production.
Right.
Productivity is key. So the moment we are not able to access equipment, we are not able to access loan facilities because of the high interest rates,
Right.
working capital to purchase raw materials, then you notice that the competitiveness of our economy in the context of manufacturing
Right.
is hampered in a big way. And it is no wonder that the contribution in 2023 of manufacturing to GDP in Tanzania was about 8 to 9%.
Right.
Uganda, 15%. Kenya, around 7.5%.
Right.
So really, as I think the people maybe who are in a position to really give us and manage those factors,
Right.
the sooner they do it, the better for us. Because
Right.
then we will be able to deliver the vision that the government wants us to deliver
Right.
from manufacturing.
Right, and basically, Dr. Habel, what Engineer Chris is saying is that somehow, the manufacturing sector does feel a bit disenfranchised. We're going on a very short break. However, would you like to reply to his sentiments?
Yeah, just a quick one on that one.
Yes.
I think the critical thing there is the fact that Amandi mentioned about the economy of Tanzania and the economy of Uganda and comparing to the economy of Kenya.
Yes.
I think there are two key policy bodies that are critical here. One is the one in charge of the monetary policy, which is the central bank.
Yes.
Then one is the one in charge of fiscal policy, which is the National Treasury.
Yes.
Now, as long as the market has got confidence that these two guys know what they're doing and they are therefore stabilizing the economy, the confidence comes in and you'll see the rate, the exchange rate. I mentioned about the exchange rate having a component that is noise,
Yes.
a component that is based on the fundamentals.
Yeah.
As long as we believe in what these two guys are doing, the noise element is reduced because that shows the confidence you have in them. So the shilling will be exchanging at its fundamental value, the equilibrium value,
Yes.
which is much more stabler than the one that is got a lot of noise.
Right.
So when you talk about 162, that 162 certainly was a lot of noise in there.
Right.
But when it comes down to its fundamental value, we'll see the shilling stabilizing at a much more stable level and therefore much more predictable. One of his main challenges is actually the ability to predict and therefore plan accordingly.
Yes.
When the shilling is predictable, or in other words, its volatility is not significant, you can easily plan in a much more reliable way and therefore have some meaningful numbers for you to work with.
Right.
Yeah.
And the conversation is then only getting more and more interesting as we continue to delve into the dollar debacle and how exactly it has been affecting the manufacturing sector. Of course, we have Dr. Habil Olaka, who is telling us how exactly the Kenya Bankers Association feels about this particular, topic, talking about the Treasury and, of course, the Monetary Policy Committee, which is under the Central Bank of Kenya, how exactly these policies usually, affect us. And, of course, Engineer Chris, who has been telling us how the manufacturing sector has been taking this. We go for a very short break. Don't touch that dial. We'll be right back.
Na safari hii katika Mfahamu Kiongozi tutakuletea viongozi aina mbalimbali.
Nikuwe na Nisani kama 10 na pia nikuwe menua minibus. Minibus nikoniwa.
Kushinda unaangalia simu ya mzee. Soma Biblia ama ingia kwa washroom ujisugue mpaka nimetoa hivi.
I don't know whether any of my children would want to get into the political field. Sijajua bado.
Kila Alhamisi saa 1:30 kuendelea.
Join us on a journey through the concrete jungles and rising skylines, where every beam, every nail tells a story of progress and vision.
In every aspect of life, you have to look at several dynamics.
From groundbreaking,
Nowadays with the tech, you can check on different websites or you check online and you can see some inspiration. So at least that one would be a direction already. I'll know like what kind of style you're going for.
to finishing touches, witness the dedication of the hard-working teams who bring these ambitious dreams to reality. The Realtor, Tuesdays at 6:30 p.m.
Welcome back to the marketplace. When we went for a very short break, I was talking to the gentleman in the studio and we were just talking about denoising, the noise that is, within the financial sector and how exactly, that has been affecting the people. We were also, looking at, or we were thinking about the clips that we saw, and we did point out that in the second clip and third clip, the people who were talking, the Kenyans who were talking within those clips, they were saying that they expect that the product prices are going to start coming down. The commodity prices are going to start coming down. Maybe if you could denoise that for us, Dr. Habil.
Yeah, okay. What tends to happen is that, Kenya is a net importer.
Yes.
So most of the consumables will have quite a significant import content. And as the engineer mentioned, currently manufacturing in Kenya relies significantly on inputs,
right,
with a lot of foreign content. The other significant import is oil for our energy needs.
Right.
And the point I'm trying to put across that most of that is priced in foreign currency.
Yes.
So when the shilling is on a depreciating trend, it means that the Kenyan shilling equivalent of those imported goods becomes more expensive.
Right.
And therefore, the cost of production, the cost of inputs, the cost of, and the ultimate product at the end of the day becomes expensive.
Yes.
So the cost of living is significantly affected upwards. And that's how a depreciating shilling affects our consumption basket, you see. So the reason why we should have stability in the exchange rate. If the exchange rate is stable, then you have got a fairly stable cost of living that is not spiking upwards or having a lot of volatility.
Right, and fluctuations.
Yeah, that's the essence of having a stable exchange rate.
Right.
Now, there is another concept. There are three quantities that are interlinked.
Right.
That's inflation, interest rate, and exchange rate.
The trifecta.
Yes. And they are interlinked to the point whereby you can manage one through another. The tool that central bank, for example, through the Monetary Policy Committee has is mainly using the interest rate as a tool of managing, for example, inflation. And inflation can either be, externally driven or internally driven, from the supply side or from the demand side. And you can use the interest rate as a tool to manage inflation.
Right.
So the objective of central bank is to ensure that you have got a stable price stability.
Right.
And price stability means maintaining inflation that is low and stable.
Right.
So sometimes you have got to inject additional interest into the market in order to bring inflation within control.
Right.
Once you have brought it under control, you can then bring back the interest rate back down to support credit growth and therefore support production in the economy.
Right.
So I think those are variables that you'll see being played around with in the market. You'll normally hear complaint from the market of the fact that why is central bank increasing the interest rates?
Yes.
When at this point in time, all we require is a fairly low, stable interest rate to support the economic recovery. But sometimes it's necessary to inject that small pain for you to be able to achieve the stability and therefore bring the interest rates down.
Right, and it's very good that you've brought that up. I think we should just delve into the interest matter here and now. Of course, there's those three factors that usually play around, and it affects the economy and how exactly businesses usually fare on. Engineer Chris, when it comes to the interest rate, of course, you have seen that there have been changes. It used to be 10.50, now it's at 13%. Usually you guys, or the manufacturing sector, usually takes loans in order to advance their agendas. How do you feel about this?
Let me go back to the way organizations function.
Yes.
We have, the planning for new products. There is the sales forecasts. There is the supply planning where you look at the entire supply chain, where you buy the raw materials, you are able then to bring it to your factory, you are able then to do value addition, convert it and package it in a way that then you transport it to the consumer. And in a lot of cases, we sell it through maybe distributors or wholesalers and retailers. And in the whole length of the supply chain, you will notice that there is a lead time. By the time a raw material is being bought until it reaches the final consumer, there is always that lead time.
Right.
Now, because of the volatility of the interest rates, number one, it brings in a credit risk to our consumer or to our potential distributors or channel partners, because then they are not able to get credit to be able to buy our goods.
Yes.
And if they don't buy the goods that we manufacture, again, we find ourselves in a very tough scenario, because then there is a relationship between the cost of production in terms of volume, in terms of the quantity you make, and the price per unit.
Right.
And competitive economy is driven by a very effective and efficient deployment of resources.
Right.
Effective in the context that you are doing the right things, and efficiency is doing things right. So if then you don't have demand, you find yourself, you are sitting on a working capital that is not being bought by the distributors or the channel partners, which then doesn't reach the consumer. So for us, again, it poses another challenge from downstream, where because of the high interest rates, the access for working capital by our channel partners is significantly hampered. Therefore, somebody who was buying a full load truck worth maybe $1 million shillings, using a facility from the bank, then he's not able to do that. He will then be forced to buy maybe half a truck. And by so doing, the economies of scale disappears.
Right.
The consumer then doesn't find the product at a competitive price. And so, again, to answer the question relating to interest rates, it bites us from both directions, that the organization is not able to access facilities to expand or to buy raw materials. At the same time, also, it affects the people who would otherwise be our channel partners in our route to market strategy.
Right.
So the final consumer, at the end, gets the pinch, because if we load inefficiencies in the value chain, you will find the cost per unit is high, consumption then goes down, and I think economists will agree with me on this matter, that there is also a relationship between price and demand.
Right.
The law of demand dictates that if the price goes up, the demand goes down, the consumption goes down,
Yes.
and the net effect is that capacity utilization of our machines shrinks. And if it shrinks, then it becomes just like an example of a bus,
Right.
which is designed to carry 60 passengers, and it starts carrying 20 passengers or 10 passengers. The net effect is either you get the cost of operating the bus at 60 passengers and you subdivide to the 20 people,
Right.
or which again becomes unbearable. And people then will either not consume the product, or they go to competing products. And competing products would be also products from other destinations,
Right, imported
coming to the country.
Right.
Yes.
Right. Dr. Habil, I think I'll just throw this back to you. Of course, before the Monetary Policy Committee made the decision to raise the base rate to 13, you had an advisory as the Kenya Bankers Association on what would be the best course of action to take before they even took that action. What exactly was your advisory about?
Now, you know, there are a number of factors that come into play. And normally what tends to happen is that we will give an advisory, what you call the research notes,
Right.
which comes out before the actual Monetary Policy Committee meeting.
Right.
Now, the Monetary Policy Committee normally has got more information, more latest data as they make their decision than we do.
Right.
So what then happens immediately after the Monetary Policy Committee, they will normally disclose the additional information they have,
Right.
and on the basis of which they made the decision.
Yes.
So what we then do, we also now give a commentary based on the additional information that the Monetary Policy Committee has given.
Right.
So back to your question, our recommendation or our proposal at that point in time was the fact that it should be retained at
Yes.
what it was, partly because of the fact that it had just been increased in the previous decision,
Right.
and the effects were still yet to be felt in the market.
Right.
So we felt that the decision was still filtering through, and therefore they should be given some more time in order to percolate, so to speak.
Right.
But the additional information MPC had was the fact that, one, there was pressure
Right.
on the shilling in terms of the exchange rate, you see, and that needed to be stabilized. But also, the additional information they had was the fact that all the indicators of inflation had actually shown an upward surge.
Right.
Starting with the core inflation, it was actually rising. Food inflation was actually rising, and the fuel inflation was therefore rising.
Yes.
And the combined, which is the headline inflation, was actually, of course, increasing.
Right.
Now, with that information about the inflation, from what we had, it was therefore justified in the decision of increasing it.
Right.
But I think the critical thing here, which we need to be alert to,
Right.
is the fact that inflation is the main enemy, which we have got to attack head on.
Right.
Trying to achieve growth by supporting economic growth on an inflationary environment is like building a house in quicksand.
Right.
That house will come down.
Right.
So what you need to do, first of all, is to ensure that the base, the foundation,
Right.
is strong enough. And that, what you therefore do, is ensure that you bring this inflation down to a stable, low level.
Right.
On the basis of that now, you can achieve growth.
Right.
on a stable environment, whereby it's like building a house on a stable foundation,
Right.
which will be now a stronger house than having one on quicksand.
Right.
So in short, it's much easier to achieve stable growth that
Right.
is sustainable if you have got a low inflation environment.
Right. Of course, Dr. Habil, when you were giving this particular advisory, you had, you had advised the Monetary Policy Committee to keep the base rate as it was. And just for context, inflation is now at 6.9. Of course, this is so much better than where we were. We were almost hitting double digits around mid-year last year. And that would have, had a very huge effect, especially on the economy. When you were giving this advisory to the CBK, you did, of course, do your math. Do you say now that maybe, you've changed your minds?
No, it was a movement from the previous to the current.
Right.
The previous one was the October, which had been used in the last decision, which was in December.
Right.
You see, now we were talking about the current movement in terms of inflation.
Right.
So that's the closing numbers that were now being used for February. And that's why there was a surge.
Right.
You see, that surge between October and December is what influenced the decision of central bank.
Right.
Then increase the central bank rate.
Right. Dr. Habil, this base rate is the highest since the Kibaki era. Of course, you are saying that this is unnecessary. It's a necessary evil, quote unquote, so that the economy can be stabilized a little bit more. And you did say that one of the reasons why the CBK did move this base rate to 13 even in the first place is the fact that, there was some sort of, height or hike when it comes to the exchange rates. But now we are seeing that, it's in favor of the Kenyan shillings. You do see, or you do project that there will be a stability. Does that therefore mean that in the next, monetary policy changes, we might see, either a keeping of that particular base rate?
I think if factors remain as they are, and if inflation starts trending downwards, most probably the decision that central bank would make at the next monetary policy committee will be consider dropping the central bank rate.
Right.
But that's if and only if those factors remain as they are, where
Right.
inflation is actually going down and the shilling remains stable.
Right.
In terms of exchange rate.
Right.
Yeah.
The trifecta. Everything depends on everything, depends on everything. Engineer Chris, of course, I have seen that this change in the base rate, especially when it comes to, the Central Bank of Kenya, has already had a ripple effect. And one of the major banks, Equity Bank, becomes the first bank in Kenya to adjust its lending rate to all its clients. And in a notice to customers, Equity has said that it is raising the rate from 17.56% to 18.24%. As manufacturers, of course, you do have, loans that you are already servicing. This change is set to have a ripple effect. How exactly will you be cushioning yourselves?
So, first of all, I would like to just elaborate more.
Right.
That the financial sector is a very key component to thriving economy. And for us in manufacturing to be able to, be, as I said earlier, to be more efficient, to be more effective, we need to have our factories running at full capacity.
Right.
Running 24/7, 365 days. On that basis, then we are able to generate products at a competitive market price.
Right.
Now that there is a challenge on interest rates, most of the organizations have deployed some tools that, number one, enhances the more efficiency of the resources that they have. You will find organizations deploying some of the Japanese technologies. We have Kaizen, for example,
Yes.
which is a small incremental continuous improvement that seeks to make organizations get more value
Right.
from the same level of input.
Right.
Another way has been that a lot of manufacturers have had to bear the increasing prices by reducing on their margins. You notice most of the organizations now in manufacturing are literally working on a very, very scaled down level of margin.
Right.
And thus the productivity is being maintained at the same level, yes, but then the effort doesn't correlate with the margins. However, as manufacturers, we are saying as Daktari has promised here, that this is a temporary hiccup, that we will soon come out of it, and then we will be able then to recover in terms of the margins that the shareholders are expecting and the investment that we want to do and make a vibrant economy out of manufacturing.
Right. Engineer Chris, I'm glad you mentioned Kaizen, because constant improvement should not only be used in manufacturing, it should be used in everything that we do. And speaking of constant improvement, let's play the very last clip, the fourth clip.
Strong evidence to show that economic recovery is with us. And that starts from the last quarter of 2023. And I did actually try to mention in area meetings that we have a growth of 5.6% in that quarter. It means that it averages the growth in the whole of 2023 to about 5.5 to 5.6.
That is the Cabinet Secretary for Treasury, Njuguna Ndung'u, Professor Njuguna Ndung'u, who is talking about the state of the economy and the projected growth. He is talking about 5.6%. Of course, this projection is good news to a lot of manufacturers. But as we have said earlier, there is, of course, the trifecta effect. Everything affects everything. Dr. Habel, what are your sentiments on the professor's sentiments?
I think Professor is right in the sense that from the trend we have set, I think the projections are looking good. However, it's dependent on a number of other factors. You know, it's interesting because it's like a chess game where your actions depend on the actions of others. So like, for example, if the US was struggling with inflation and therefore they decide to increase their Fed rate, you know that affects our economy.
Right.
In the sense that funds then flow from these, emerging economies into the US. And what happens? Our shilling starts depreciating. And so what will happen? The local authorities will then make a move to counter that. So what will happen then? They will also start tightening, which means they start increasing the interest rates in order to redirect the funds flow back into the economy. And that affects a number of other variables. So the growth will be affected by such moves. And therefore, that's why I'm saying that according to the trend that has been set, it looks achievable, but a lot depends on other factors.
Right. And of course, this growth projection, 5.6%, is, marginally speaking, it's going to be really good, especially for the economy and for manufacturers. For the manufacturing sector, Engineer Chris, do you feel that, there is a light that is coming to you? Do you feel the hope that the professor, the cabinet secretary, is projecting?
True. There is a lot of green light at the end of the tunnel, considering, number one, the happenings of the last few days, where there has been, a sharp improvement or strengthening of the Kenya currency against the dollar. And therefore, it gives us the assurance that, yes, even the plans that we had started maybe to lose confidence about engaging in, obviously that confidence then is very important. Secondly is, as you've pointed out, there is the economic growth. There is the way economy behaves. So that if one sector of the economy thrives, it definitely makes the other sector of the economy as well to grow. So the synergy across the, different sectors of the economy will be very key. And looking at the projected growth definitely gives us the assurance that there will be demand for our products. And as I pointed out much earlier, then obviously there will be a higher level of productivity in the manufacturing sector. There will be demand for agro-based products, which will then be processed in our manufacturing setup, and we will be able then to make goods available to the local consumers and even in export. So for us, from a manufacturing context, a positive projection for economic growth gives us the assurance that the output, even the demand for agricultural raw materials, farmers will have a reason to go to the farm, because then if there will be an end consumer who will be in need of a product, we will then have a need to buy from them, like in the cotton value chain, for example, where if, for example, we note that there will be anticipated growth, people who are in cotton sector sector, for example, will need to invest, get us the cotton, we process it, convert it into apparels, sell it to consumers. Because at that time, because of the economic growth, we anticipate them to have disposable income. And if you, as I pointed out earlier, the producer price index, there is a relationship between the producer price index and the consumer price index. So the moment there is confidence, volume goes up, cost per unit goes down, and we are all able to get the benefit.
Right. And joy and jubilation across the country as consumers and producers both, win. It becomes a win-win situation. However, when it comes to this particular projections, there could be a few changes. As Dr. Habil has said, it depends on a lot of things. There are a lot of changes that usually take place. We have seen that the base rate that the Monetary Policy Committee had set was at around 13%. This, as we had seen, especially when it came to a lot of banks that had been giving, their quarterly reviews, their quarterly results. They were saying that defaulting is, increasing, especially when it comes to people who are taking up loans. Dr. Habil, what exactly is your comment on that?
Yes, you see what happened is that when the interest rates start coming up, the ability of the borrower to meet the obligation to the bank becomes significantly challenged. So as the rates go up, the actual effect that you feel in your portfolio as a bank is that the quality of the portfolio starts going down. Start seeing the non-performing loan portfolio increasing.
Yes.
Non-performing means, it's overdue.
Right.
It's basically defaulted. Now, when that rate is going up, it's not a good sign because it means the recovery of that money becomes extremely doubtful. If you look at, for example, at the end of 2023, the rate had moved from 12.5 in the previous year to 13.3 in the previous year to 14.8 at the end of the year. Now, there is a possibility that we might start seeing some improvement in terms of the rate beginning to come down. But we are at a very high level. 14.8 is significantly high. There were times when we were in the range of between 4 and 5% in terms of non-performing portfolio, which is a fairly comfortable level for an economy like ours. When you start going into the range of 14.5 and beyond,
there's
you're
worry
really having a problem because you're talking about now the stability of the financial services sector. The banking sector having a huge non-performing portfolio is raising a question on the stability. And the stability is a concern for all of us because the banking sector drives the economy.
Of course. Of course, Dr. Habil, and as we start to conclude this, very scintillating conversation, unfortunately, time is ticking. In as much as we talk, time is moving. Loan loss provisions, especially from banks, has to now increase. As you know, the Kenya Bankers Association CEO, what exactly are banks saying about this?
Well, fortunately, as I mentioned in the beginning, we have got a fairly well-capitalized banking sector. In other words, you have got adequate buffers, and the buffers help cushion us in the event of shocks. Like, for example, the non-performing loan portfolio. When it starts increasing, you have got enough buffers for you to be able to pass the necessary provisions to ensure that all the non-performing portfolio is adequately provisioned. So which means that you have taken the losses in anticipation of the loan defaulting. And therefore, when it actually defaults, you're not under threat of the bank going down because of not having enough capital to meet that shock. Therefore, the confidence we have now is the fact that we are adequately capitalized. These shocks will come, we'll overcome them, and have a much more stable growth.
What Dr. Habil is essentially saying is that his house is in order. Engineer Chris, when it comes to the manufacturing sector, the banking sector says that they have enough buffers. We're ready to take on whatever challenge that is coming our way when it comes to the manufacturing sector. As we conclude, of course, what would you say?
I would just want to point out something that I came across. As is rightly pointed out, the non-performing loan portfolio at 15% or thereabout, the details around that also indicates that about 58% of that non-performing loan portfolio is driven by 3 sectors of the economy. 58% of it is driven by trade, manufacturing, and real estate. So you notice that our credibility in as manufacturers to access future loans because of the high default rate is now coming into sharp focus.
Right.
And it paints an impression that we really need then to support manufacturing so that it thrives and be able then to service the loans and not be in the bad books of being in the non-performing loan portfolio. Because if you talk about out of the 15.6%, 15%, you take 58 of that percentage. It's really a huge, considering the billions of money that is in question.
Right.
Yes.
And no one wants to be in the bad books of the banking sector, to be honest. No one wants their portfolio to be damaged or soiled in that degree. Of course, we had been talking about, the dollar debacle. There has been a lot of fluctuations in that respect. We were just trying to demystify it, denoise it, see exactly what was happening there and how it was affecting you and your businesses and, of course, the institutions wherein you work. Thank you so much for being a part of this conversation. This has been The Marketplace. Until next week, same time, same place. My name is Hibak Saeed. Have yourselves a lovely night.
Na safari hii katika Mfahamu Kiongozi tutakuletea viongozi aina mbalimbali.
Nikuwe na Nisani kama 10 na pia nikuwe menua minibus. Minibus nikoniwa.